Yeah, the performance of Bitcoin has been stellar this year. It is up 136% on a year-to-date basis. And in this week itself, earlier during the week, it hit a historic high of $104,500. If we compare Bitcoin to other traditional asset classes, obviously Bitcoin stands out, even though it has a relatively small market cap of 8.75 trillion as compared to the US S&P's 185.7 trillion. So S&P year-to-date returns is almost 30%, pretty similar to gold, although gold is about 2.5 times smaller compared to the S&P's size. And now the FBM KLCI is only at 1.8 trillion, but it is still up by 11.3% on a year-to-date basis. So the purpose of me showing you this chart today, apart from directing attention to Bitcoin, is to really just show the stellar performance of the global markets, and not just Bitcoin. There's gold, there is the US market, and there's the FBM KLCI. As long as you're an investor, you stayed invested since the start of January, your portfolio or your investments will be up by quite a significant margin right now. So the main reason for Bitcoin hitting multiple all-time highs, breaching $100,000 this year, obviously it's due to Donald Trump's presidential victory. So the president-elect, he plans to create a national strategic Bitcoin reserve. And it entirely depends on whether he follows through his promises next year or not. Yeah, he also wants to make the US the center for cryptocurrency, but so far things are looking quite okay. In fact, this week he announced that he has elected David Ossex as the new White House AI and crypto czar. In this important role, David will guide policy for the administration in artificial intelligence and cryptocurrency, two areas critical to the future of American competitiveness. And when you look at Bitcoin's chart, right, you layer the US election on top of it, yeah, it's pretty clear. Yeah, all of this rally is mainly due to Trump. Okay? Before his election victory, Bitcoin has already rallied by 28%. And after his victory, Bitcoin rallied by another almost 50%. Now, more about Trump, his policies, well, he's very focused on growth. Okay, he wants inflation, he wants growth, stock market friendly because he's a businessman. He also supports a low interest rate environment and less taxes for corporations. But at the same time, he wants a stronger dollar. So if you're a bit familiar with economics, you know that this is not really possible because low interest rates typically lead to lower borrowing costs, which means more money in the ecosystem. Sure, this will cause stock markets to go up, but it also leads to a weaker dollar. So there is a bit of a questionable thing over here, which is what economists are saying. But nevertheless, here are the sectors that you can watch in 2025 apart from Bitcoin. Elon Musk's portfolio will definitely skyrocket because Musk has been one of the, if not the biggest contributor towards Trump's victory, right? So Tesla will definitely go up. It has already gone up by 40 to 50%. SpaceX is going into IPO next year. Then Elon Musk is also the quote-unquote Doge father, right? Cryptocurrency stocks, I mentioned about Bitcoin just now. Now gold, hey, this is a bit interesting. I believe that gold will continue to go up. Well, that's because the Federal Reserve is planning to continue lowering interest rates, right? And if you know a little bit about interest rates, lower interest rates means cheaper borrowing costs, more money flowing into the economy, which leads to scarce assets continue to go up in price. But then again, Trump has also promised to quote unquote end the war in Ukraine as well as the Middle East. So uh, gold typically performs when there are geopolitical conflict. So if Trump manages to end the war during his administration, well, definitely you see gold retrace a bit. But long-term wise, I believe that scarce assets will continue to go up. Oil and gas, now this one may underperform because Donald Trump, his mantra is drill, baby, drill. He wants to make the US oil production increase again. That will obviously increase supply and will make oil prices drop. There's banks, there's prison and firearms, Trump Media and Technology Group, as well as defense and health. These are the other sectors to watch. And the last one is China. So a lot of economists are talking about China right now, saying that, oh, Chinese stocks may underperform, okay, because of Trump's tariffs. He has vowed to increase tariffs on not only China but Canada and Mexico, which will threaten global trade. China has also criticized Trump's tariffs, saying that it will backfire on the US. Now, if you're not really certain about what tariffs are, well, they're basically an additional tax levied on imported goods into a country. Okay, so let's say an imported car worth 50,000 US dollars imported into the US, right? With an additional 30% tariff, it will face an extra $15,000 charge. Okay. Now, regardless, if you did not hear what I said just now, because it's a lot of technical news, right? And you're looking at your portfolio right now and asking, hey, Sinji, what's the point of you telling me this? My portfolio is still 100% allocated in conservative assets. And you're looking to expand your portfolio. You want to have more growth, right? In order to have a more comfortable retirement. In this case, there are several strategies for you to consider. So does this sound like you or not? When you look at the market right now, it's at all-time highs, right? Probably in January, you start here and then you say, oh, it's too high right now, I'll buy when it drops. Then it rallies by another 10 to 15%. You keep telling yourself the same thing. And now it's the end of the year already. Okay, and the S&P, since the start of the year, I've showed you the performance just now, up almost 30%. And throughout the entire year, you probably keep telling yourself this. Now, conversely, in the other scenario, when global markets, they were in quite a severe bear market, well, you keep telling yourself that, oh, it will go lower, I'll probably buy it when it drops another 30 to 40%. Then you'll see that you will never allocate into whatever asset that you want to. But in this case, you need to have a good strategy. And one of the, I would say, surefire way or a strategy that works is to first determine a specific percentage for each asset. Okay, now this doesn't only work for Bitcoin, this can work for any asset in general. Okay, this strategy actually was talked extensively by Han in our session on Thursday. Your patrons will definitely be familiar with this. Okay, so first of all, you fix a percentage for each particular asset. Let me give you an example. Let's say 60% stocks, aggressive ETF, growth funds, right? And 10% you allocate it into gold and Bitcoin. The remaining 30% you allocate into EPF, ASB, as well as FDs. So if you are investing for retirement, right, make sure you include your EPF portion as well. Why do I say this? Because if you exclude out your EPF portion, right, you now see that your entire portfolio becomes much more conservative. Okay, so this is your target over here. Okay, it's an arbitrary percentage. At the end of the day, you have to determine the percentages yourself. But it's very scary, right? Especially if you're starting from scratch. 100% in conservative assets, and then for you to suddenly just shift your entire portfolio 60 to 70% into stocks, aggressive ETFs, very scary for a new investor. Which is why, this is what Han mentioned, you should give yourself 12 months to rebalance. Okay, so rather than entering 60, 70% or even 10, 20% into Bitcoin or other assets right now, you enter every month bit by bit. 1 to 2% into Bitcoin, 2 to 3% into aggressive stocks, another 2 to 3% into aggressive ETFs, another 1 to 2% into gold. Then by the end of 2025, you tell yourself that you hope to achieve this portfolio, which is to your liking. And the formula to determine this percentage, how much you should invest in risky assets, how much you should maintain in conservative assets, well, that depends on the rule of 100. Okay, so you take 100, you deduct it with your current age. That is the percentage that you should be investing in risky assets right now. Now, say you're 30 years old, 100 minus 30, 70% of your portfolio should be allocated in these assets, i.e. stocks, aggressive ETFs, growth funds, gold, and Bitcoin, which will give you an average return of about 9 to 12% per annum. Yeah, because aggressive assets, they typically return you about 10 to 12% per annum. Yeah, and they tend to be volatile. Yeah, volatile meaning that, like the S&P, sometimes it goes through bear markets like Bitcoin. I think I have a chart of Bitcoin over here. Yeah, previously, earlier in 2022, 2023, Bitcoin went through a severe bear market where it lost, I think, about 70 to 80% of its value. So yeah, these are considered risky assets. Yeah, and they give you 10 to 12% or sometimes even much higher returns. Now, when it comes to safer assets, well, I'm sure this one you guys are familiar with ASB, ASM, EPF, FDs, and cash apps give you about 3 to 5% per year. And if you can take more risk, obviously you should, right? Because higher growth will definitely lead to a much more comfortable retirement. You will see your portfolio grow significantly faster. Now, the other flip side, let's say you are an early adopter of Bitcoin. Yeah, you bought Bitcoin in 2017, or maybe even stock X in like the early years during IPO or whatsoever, and now it has rallied by 600%. And you're asking, oh, should I take profits right now or not? Knowing that markets may go higher. Yeah, and you're looking at your portfolio, it's about 90% Bitcoin or 90 to 95% in stock X, obviously over allocated into one specific asset. In this case, you should ask yourself, will you feel guilty if Bitcoin drops 50% over the next few months? Yeah. Conversely, it works for other assets as well. Will you feel guilty if stock X returns back to the buy price? Right? Will you feel guilty of not taking profits then? Yeah, if you do, then that is really a strong signal for you to rebalance into other assets. So at the end of the day, you already took profits into whichever asset that you are over allocated in right now. Okay, so to sum this section up, if you are starting 100% conservative, there's no worry about this. No need to immediately rush yourself into all these assets. And number one, you take 100, you minus your age. That is the percentage that you know how much you should allocate in risky assets. Okay, that's the plan already. Then the risky assets I listed here just now. And then after that, you give yourself 12 months to rebalance your portfolio. Okay, so every month you allocate 1 to 2% into Bitcoin, 2 to 3% into US stocks, ETFs, so on and so forth, so that by the end of 2025, when you review your portfolio again, you'll feel better. It's much more aggressive, the growth is much more healthier compared to your original portfolio of being 100% conservative. If you're a patron, you can watch the replay in the Patreon website right now. If you're not a patron, you can try the first week for free, and you can also watch the replay. So first question by Michael. Is it advisable to go for Bitcoin or Bitcoin ETFs? Will be sufficient as ETF will be more affordable. Now, there is some confusion about Bitcoin and Bitcoin ETFs. Number one, you can buy Bitcoin from as low as 1 ringgit. Okay, and we are talking about the real Bitcoin. We're not talking about ETF. Number two, you must understand what an ETF actually is. Okay, so ETF, short for Exchange Traded Fund, basically just tracks the asset. Okay, they track a particular asset, in this case Bitcoin, in this case gold, in this case the US S&P. And the main benefit of them is that they make investing very easy. Yeah, let's say you don't want to go through the hassle of like opening a new account, understanding what cold wallet is, storing your own private keys, etc., etc. All this is crypto bros gibberish, okay? Which, if you have a lot of experience, you understand what I'm talking about. And if you don't want to go through that, well, then you can invest in a Bitcoin ETF. Currently, I'm not too sure whether they are ETF supported in Malaysia. There is Halogen Capital, which I think is also a Bitcoin ETF, but it may be considered as a unit trust as well. You can check them out. Yeah, they are selling a Bitcoin fund right now, which tracks the spot prices of Bitcoin. It's 99% allocated in Bitcoin, if I'm not mistaken, and 1% in other assets. So obviously, being an ETF and being it managed by an institution, they definitely charge fees lah. If I'm not mistaken, Halogen Capital's fees is 1% per year. Yes, yeah, 1% per annum. Okay, so the notion that ETFs are cheaper compared to buying Bitcoin directly is actually not really true. But ETFs, they are much more convenient. Yeah, you don't have to manage the asset yourself because the asset is actually held under a trustee in this company's name. Okay, so you can check out about the Halogen Capital's ETFs. And another thing about Bitcoin, right? So some people still think that, oh, you need to buy an entire Bitcoin. Well, you don't need to do that. Yeah, now these days there are so many different types of exchanges, which I also send the list here. A list of registered, regulated digital asset exchanges. It's not only Luno, there's already Hata, MX Global, Synergy, etc. etc. Obviously, Luno is the most well-known one. It's the largest Malaysian crypto exchange, and it allows you to start from as low as 1 ringgit. You don't have to own an entire Bitcoin. You can own a tiny portion of Bitcoin also, right? And then you can continue a dollar cost averaging maybe 200, 500, X ringgit every month, depending on your liking. Okay, so that is the difference between investing in Bitcoin and investing in a Bitcoin ETF. Yeah, the ETF tracks the Bitcoin's prices. Okay, so yeah, for beginners, what I would generally recommend is you can start with Luno, okay, or any registered digital asset exchange. Okay, and the registration process is actually pretty simple. You just download the app and then the process is pretty straightforward from there. You'll be able to buy some Bitcoin immediately. Do you think it's a good idea to buy Bitcoin ETF, 100% BTC net asset value? Well, that's not always the case because ETFs, they have to keep some in cash. Because at the end of the day, if some investors want to withdraw their money, right? That's why they have to keep like 1 to maybe 5% of the net asset value in cash. So they're not really entirely invested in the spot prices of Bitcoin. Rather, it's about 95 to 99%. Okay. Instead of holding Bitcoin directly, assuming right now that I do not have any form of crypto wallet. So crypto wallet, now, this is a separate topic. It's actually a complex topic, which if you are planning to hold your own keys, yeah, quote unquote, hold your own keys, then you're recommended to buy your own cold wallet. It costs about 3 to 500 ringgit. It's quite a hefty cost. And then you'll be able to put in a simple sense, you'll be able to withdraw the Bitcoins out from the exchange and then keep it in your wallet, sort of like pen drive, so that it won't be stolen. Okay, because people are afraid of exchanges or ETFs managing your Bitcoins, right? If these entities go down, then your Bitcoin is no longer there. Now, that's the other side of the story that you got to worry about later. But if you're starting off, what I would say is it's a good way to start with regulated exchanges. Okay, and the options are over here. Obviously, you don't have to start with just Luno, although Luno is the most well-known one. Okay, so moving on, which platform is the best to buy Bitcoin? So if you're looking at regulation, right? And in Malaysia, definitely you have to look at regulation. For now, I think it's Luno. And for me, at least, I'm mainly acquiring Bitcoin through Luno. I'm also using Binance, although Binance is unregulated. It's banned in Malaysia, in fact. You can't download the app in Malaysia. But even though it's banned in Malaysia, you still can use it lah, so to say. It's just that if you lose your money within the exchange, there's nobody you can sue. You cannot claim your money back anymore. Which is why, again, for beginners who want to start, yeah, you're looking at your portfolio right now, previously 100% in conservative assets, and then today you listen to me talking about it, and then thinking, oh, I'm so far behind, I'm supposed to be 70% allocated in risky assets. I gotta start today, right? Maybe 1 to 2% into Bitcoin every month. Then probably you should start with regulated exchanges first. Play on the safe side, go with these exchanges, and compare the fees. Okay, because Luno, as far as I know, the fees is 0.6 to 2%. Okay, which if you're a new user, the first time you buy Bitcoin, if you use someone's referral code, you can buy from the homepage. And once a 2% fee, which honestly is very high, then after that, you should use their exchange feature, which I will talk about it in a separately different session if you guys want to learn more about this. Thank you guys for coming to tonight's session. Hopefully you guys learned something. Shout out to all our Gather members, CH, Andrew, Wendy, Alex, CC, Urshad, Caveman, Kelvin, Tommy, Jinkang, Adrian, Jazz, Wenyan, Dean, Duhan, Supi, Faris, Alan, Jackson, Raizan, Hudson, Jeffrey, Lukman, Jack, YC, Arif, Haziq, Jindan, Leanda, Adam, Ashley, Sean, Jason, Putrak, Alvin, Jia Chen, Audrey, Chaiwei, Fafmi, Kim Yip, and Justin, as well as all of our learner members.